Assalamu alaikum and welcome back to another episode of Wealth with Wahed. Hope you're enjoying our new series with HSBC. We are now on the final episode where we're speaking about ethical investing in ESG. I'm your host Adam, and today I have with me a very special guest that we've had before in our recent episode, none other than Sefian Kasem, Head of ETF and Indexing Investment Specialist at HSBC. Welcome again, Sefian.
It's great to be back, Adam. Nice to see you again.
We've spoken in the previous two episodes. Episode 1, touching base on introducing the fund to the market, and in episode 2, what type of investors would benefit the most from investing in the fund in itself. So in this episode, I'd like for us to explore the differences between this new fund that we would be introducing versus what is already currently available in the market, if you don't mind. So perhaps the first bit that you can touch on is what are the key differences that one can expect from this fund?
Sure. I think it's probably best to start with the reason why we developed this suite of funds in the first place. As a house, we noticed that there was, generally speaking, a lack of tools, if you like, for investors that want to build portfolios, Sharia-compliant portfolios, to use. So we noticed in that respect that the Muslim community globally was being underserved. So we wanted to address that issue, create a product set that Muslim investors worldwide could use to build Sharia-compliant portfolios on the same terms as their non-Muslim counterparts. So they were able to invest, save, grow their capital, preserve their capital in the same way that their non-Muslim counterparts can. So that was the ultimate objective of this exercise, and we've created a set of passive products, so index tracking products, which, as I say, are tools which could be used for constructing portfolios of different kinds with different risk profiles. And if you look at the market, if you look across the market, what you find is that there's, generally speaking, a lack of passive products which can be used for that purpose, but also the products which are available to investors that want to invest in a Sharia compliant manner are typically on the active side, which come with higher risk, more variability, higher cost, etc. So we wanted to address this issue and create a toolkit, if you like, for Sharia compliant investors.
All right. Okay. So if I can summarize whatever it is that you've mentioned, is essentially what this product is new and it's first in its kind to be able to address the issues that you've raised, like active management of the fund and then the cost as well when it comes down to it. These are the key differences, you would say, between the HSBC fund that we will be introducing in Wahed versus what's currently available in the market.
Yes, that's correct.
You've also mentioned a little bit about Sharia compliant solutions versus the ESG in itself. Could you talk about the differences between the two and whether or not there are any overlapping features between them?
Absolutely. It's a great topic, actually, because Sharia compliant investing or faith-based investing more generally sits under the ethical investment umbrella, as does ESG investing. And actually, if you look at the ESG investing space, if you look at the Sharia compliant investing space, you'll notice there is a lot of overlap, because typically in the ESG investment space, the funds which exist screen companies according to their involvement in controversial business areas, alcohol production and sales, weapons, tobacco, adult entertainment, in the same way that that Sharia screening within a Sharia compliant fund does. So there's a lot of overlap in that regard, and we spent a fair amount of time investigating that overlap. And what we've done with our products is we've created a complementary screening methodology which is Sharia compliant but also integrates a number of typical ESG screens within the screening methodology itself.
Okay. So there are overlaps between the ESG and the Sharia compliant solutions. Would you be able to then differentiate, like, what would be the key differences between ESG and Sharia compliant?
Sure. In a nutshell, it comes down to the bias towards the E, S, and G variables. So within typical ESG funds, you tend to find there's a bias in the direction of the E pillar or the environmental pillar. Within Sharia compliant investment methodologies, screening methodologies, you typically find that the screening methodology is skewed towards the social and the governance aspects. So they both touch upon E, S, and G in different ways, either in a primary or a secondary fashion, but ESG investing is typically skewed in the direction of E, and Sharia in the direction of S and G.
Okay, brilliant. Thank you again for sharing your valuable insights, Sefian. It has always been a pleasure having you on the podcast throughout this whole series. And this kind of brings us to the end of our series with HSBC. A big thank you again to Sefian Kasem, Head of ETF and Indexing Investment Specialist at HSBC, for joining us today. Thank you.
My pleasure. It's been great working with Wahed.
Thank you again, everyone, for tuning in. Remember to subscribe to our podcast for future episodes and be sure to follow on our social media using the hashtag Wahed Wealth. Until next time, happy investing.